Hello guys, hi, how are you all? For all of you wrote your examination today, I hope you done well. My fingers crossed. I am praying for your good results in the papers that's going to come after today as well. This is going to be a short video on analysis of the paper that people wrote today. However, a disclaimer before I go any further ahead, I strongly recommend people to not watch this video, unlike every other YouTube videos where people in the beginning say, please watch this video till then. Considering the fact that people who wrote your exam today, remember, there's nothing that you can do about the paper that is over, but there is so much more that you can do about the paper that's going to come up next. So please do go ahead and then prepare for your law paper. But people who are preparing to write in November 2023, this is a video that you should see. You should know what happened with people who wrote exam today. And though I tell people not to watch, I know people will still watch. So just to ensure that your enthusiasm and energy towards the next paper won't go down, I will not be discussing any of the answers. I will not be giving out any of the treatment of adjustments in this paper analysis. I'll just be telling the chapter name and what is the tricky part that was there in this question. I will, however, be very soon uploading a very detailed answer discussion video for this entire paper. And I hope you people will watch that till then. And that video will come up only after the last examination of Inter Group 2 being over. So why to waste time? Let's get started. So as usual, paper is going to be this way. Question number 1 is a compulsory question, and 2, 3, 4, 5. What are the next 5 questions you're supposed to answer? 4 of them, 20 marks each, 5 questions, all of that being same. Question number 1, as usual, is an accounting standard question. This is on accounting standard and property, plant and equipment. So it's saying that there was a machinery which was of 21 lakh 20, which was included in the purchase of goods. So the 56 lakh 30 is the carrying value of the plant and machinery at the beginning of the year. There is one machine which was purchased but wrongly included in purchase of goods. Now you need to bring it back and then add it to the value of the machinery. They're telling on 30th June a machine was disposed. This was the machine which value as on 1st of April is given. So this is not the machine that was purchased during the year, but the machine that was held with us at the beginning of the year is being disposed, and this has not been sold for cash. As a part exchange of a new machine is how you given up this machine. So that new machine what is acquired has to be debited and the credit has to be given to this old machine, and the remaining part will be cash. And this new machine has to be depreciated only for the balance period. And they've asked us to compute depreciation under WDV method. 3 small questions. One, depreciation. One, book value of the plant and machinery. This you might have read, how to treat the asset when it is exchanged. Should we treat it at fair value? Should we treat it at book value? I hope you recall. Only and only if in the case where commercial substance is not there and the fair value of the asset given and fair value of the asset taken both are not available, that's when you go to book value. However, in this case, the fair value of both the assets are available. The asset that is received has to be recognized at its fair value. And they've asked us to recognize the profit or loss on exchange. In this case, because we are doing fair value, there would be profit or loss. However, if you go ahead for exchange of the asset and it would be recorded its book value, there would be no profit or loss. However, I'm not going to tell you how much will be the profit or loss in this question. You would have to compute it. I'll be very soon uploading a video on this. Okay. So the question number 1, first sub question was on property, plant and equipment for 5 marks. So the crucial part of this question was that exchange of asset. And coming to second question, so looking at that symbol only, you can easily tell that there is an AS11 question. Truer Limited is an Indian importer. It imports goods on True Value Limited from London, and they've basically given some cash. Pay immediately with a cash discount of 1% or pay after 6 months. The company is available. Company has 2 options, whether to pay immediately with cash discount of 1% or to pay 6 months later at 5% interest. So they've given exchange rates for both the dates. You are required to give your opinion. You need to compute what would be the amount payable if in case you avail cash discount and then settle it right now. And you also need to compute what will be the amount payable if you pay it 6 months later, and then compare both and then say which would be a better option. So this is a comparative based answer. Marks will be provided for computation as well as conclusion. So question 1B is based on accounting standard 11 for 5 marks. And question number 1C, this you can catch the keyword here. There is grant. So this is on accounting standard 12 grant On 1st of April 2021, LNR Limited purchased a plant and machinery, useful life 10 years, salvage value 10 lakhs. By this you can find the depreciable amount. Purchase of the plant, they've got grant. So how to treat this grant? As you all know, you have two methods. One, to decrease it from the cost of the asset, or to amortize the grant amount over the useful life of the asset. Or if it is promoter's grant, you can treat it that way. They've asked you to account it in all the three methods. How to account it if it is deducted from the value of the plant, how to account for it if it is treated as a deferred income and not deducted from the cost of the asset, and third one, promoter's contribution. You don't have to make your assumption here. They very clearly mentioned that the way in which the asset is depreciated is SLM method. And have you been asked to do accounting? No, you're only required to calculate the amount of depreciation in each of the cases. So simple one, not much time taking. And towards the end of the video, I'll also tell how are people finding this paper. People, did they find it lengthy? Did they find it easy? Did they find it not easy? If they did find some part difficult, what part of the paper did they find difficult? I conducted a poll and I share the results of people's opinion and not my opinion on this. Question 1D was based on accounting standard 16. So they've given loans and they've given asset. We know borrowing cost will not be included in the cost of the asset except for the fact where the asset is a qualifying asset. That is, it takes substantial period of time for setup. And for a qualifying asset, if there is specific borrowing, it will be included. If there is general borrowing, then weighted average basis we need to allocate. So in this question, they're asking us, they've given us the total loan taken, they've given the variation of loan, how much is debentures, how much is term loan, how much is other loan with differential interest rates, along with the cost of the assets. So the construction of building, plant and machinery ended on 31st of March 2023. That's the hint for you to identify whether it is a qualifying asset or not. Same is the case, they've given information with regard to furniture and factory also. You are required to calculate the borrowing cost for both qualifying asset and non-qualifying asset. The treatment of borrowing cost would be different for qualifying and non-qualifying. If it is a qualifying asset, such borrowing cost will get included in the value of the asset, otherwise not. So this is on accounting standard 16, 5 marks. More or less the questions were as predicted. You can usually expect questions from first chapter, first question to be from accounting standards. However, accounting standard 10 question 5 marks, whatever we saw here, it is something that would have definitely learned in the class, but lot of them might have taken this lightly and might not have expected question from this in the examination. People who've done your classes cover to cover and then your class notes to cover definitely be able to ace it. Otherwise, this is little more technical and little more not usual than how it's expected is what I would also like to say. So let's go to question number 2. Question number 2 is hire purchase. They've given down payment, first, second, third, fourth, fifth, sixth installment. All the installments are given, so the installment amounts are not the same. What are they asking us to compute? So this is the question on repossession. Let's quickly see if it is partial repossession or complete repossession. So there are two machines as given to us in the beginning of the question, but towards the end they would mention that repossessed only one machine. So it's a question on partial repossession where our higher vendor's book mein higher purchaser account might not be completely written off. There might be still some amount receivable, and in the books of higher purchaser, higher vendor liability need not be completely closed. There might be still some amount payable. Amount payable in the books of higher purchaser and amount receivable in the books of higher vendor will still exist because not the entire asset in a higher purchase agreement is or to say repossessed. So you might have to compute value of goods repossessed to reduce the liability of higher purchaser to higher vendor in the books of higher purchaser. So you might have to compute that goods repossessed value all again. My phone is not silent. They've asked you to do required to prepare accounts in the books of Montrec Limited. Montrec is higher purchaser. So they want you to prepare asset account as well as higher vendor account in the books of higher purchaser. So firstly, you might have to prepare that statement showing or say allocation computation of principal and interest component in each installment, and then identify till when is it paid and when is it not paid. So till the date it is paid, write the interest entry as well as payment entry. The date is not paid, on that date compute the agreed value at the pre-agreed depreciation rate or if the amount is given. So at that value you reduce the higher vendor liability in the books of higher purchaser, and asset at its book value should reduce it. The difference between the book value of the asset reducing and the agreed value at which higher vendor account is reducing the books of higher purchaser That difference will be our profit or loss for hire purchaser. For hire vendor, however, there would be no profit or loss. Okay, it would be that would become the book value of goods repossessed. If in case he revalues such asset or he sells such asset, only then there will be profit or loss. So easy one, and not too lengthy also, because it's a repetitive entries. If you have practiced this chapter good enough, you will be able to do it in time. I would say this is a very good question to have in the examination, something that should excite you, because not very tricky. Hire purchase at 10 marks is nice one, and that too without annuity or without backward computation or anything. Straightforward, entire information is given to you on the face. Then we'll go to question number 2b. So this is, they've given equity shares and everything. So this is question on investments, accounting standard 13 base. So you might have to prepare investment account with 3 columns: nominal value column, interest or dividend column, and our amount column. So there is bonds as well as equity shares. So you might have to prepare 2 accounts. There is fixed income bearing securities as well as variable income bearing securities. Equity shares are variable income bearing securities and bonds are fixed income bearing securities. So there is a dividend declared given in the question. There is a bonus issue in the question. Is there right issue? There is no right issue. So this is our usual cum interest, ex interest computation, dividend and bonus issue, which you very well know how to do. Bonus issue mein the cost of the investments will not change, only nominal value will increase. And dividend, if it is cumulative dividend, and if it is pre-acquisition dividend, so the purchase price would be more than the normal price. It would include the dividend. So on the credit side in the investment account, you would write that pre-acquisition dividend received for the period before the acquisition of the investments. You would write that. Otherwise, if it is post-acquisition, it will be coming in the dividend column only, and it will go to P&L. So pre-acquisition dividend, amount column, credit side of investment account. Post-acquisition dividend column all by itself. So I will not comment upon whether it is pre-acquisition dividend, post-acquisition is it there here, because what if you've done it as differently, I tell it differently, you watch this video, you become and then you study less for your law. No, don't worry. And that's it. So more or less a nice one, 10 marker. So 5 marks usually for our to say variable income bearing, and 5 marks for fixed income bearing question. So this is again easy, and adjustments are very much what you've done in the class. There is nothing in this question which is very hatke and very new adjustment which you would have never come across in your life. No. So very much familiar adjustment. So I would say this is also a very doable question in the examination if you are of same mind, and if you have practiced questions on investment accounting well. And you might have to just compute the closing value of investments little more cautiously, and yeah, you would have to apply cost or market price, whichever is less. So that's one point. They haven't mentioned anything, so you can follow first in first out in this question, or weighted average is also fine. Just write a disclaimer as to what have you done. And question number 3a, wow, this is our favorite departmental accounting question. So looking at ABC, I think these are dependent departments where one department's outflow of goods will go to another department as inflow. And looking at this, we don't have to read the question also in full. We can tell there is a very similar question in ICA study material all by itself. We've done this in class also. So where department A's goods to department B and department B's goods go to department C. So department B's closing stock will include some part of stock received from department A, on which department A has charged some profit. So there is unrealized profit which has to be removed from the closing stock of department B. Similarly, department B's stock has gone to department C, which is partly included in the closing stock, on which department B has booked profit. So we would have to remove unrealized profit on the stock lying in department C. I still remember the question that you guys had asked in the class, saying, so in department C's closing stock, shouldn't we remove the profit of department A also? That department A said it's gone to department B, department B to department C. I told no, that wouldn't be there. Adjust only department B's profit. So that profit would have previously nullified. So such a question, easy to do, and I don't see any new adjustment. I think it's figure to figure the same except for some numbers being different and name being different. This is a very good question, takeaway question from ICA study material. So I would say might be a possibility that accounting standard based questions were a little hatke, still from the syllabus, but not from the usual kind of questions that you expect, but questions from special transaction chapters, hire purchase, investment accounting, department accounting, were very much the similar ones that you've done in the class, which you would have done in your study, which you've seen in your study material. So as far as I see, 30 marks though is a cakewalk. And lengthy part, I'll talk a little later. So let's go to 3B. 3B is on incomplete records. They've given opening balance sheet. Yeah, opening balance sheet is given, so you don't have to prepare opening balance sheet. They've given some creditors transactions, sales and purchase were completely on credit. That is evident to us just by looking at the cash account. So they've given some closing balances, outstanding expenses are there. Net profit for the year is after allowing 10% depreciation. Closing stock is given, drawings is given, and they want you to prepare P&L and balance sheet. This is not on preparation of statement of affairs, but this is conversion of single entry to double entry. All you would have to do is opening balance sheet is given, draw up your trading P&L and balance sheet. You might have to prepare debtors and creditors account also because opening closing balances are given. There is no cash purchase, cash sale. You would have to find your credit purchase, credit sale. So not many adjustments also. Only adjustment is credit purchase, credit sale, depreciation, outstanding expense. So I would say this in comparison to the kind of questions that we've done in the class, this is a very light one, very easy one. For 10 marks though, this is a steel deal, very easily doable, and you don't even have to practice the chapter of incomplete records the day before examination. If you have basic knowledge of asset, expense, liability, income, and how to treat, when to debit, when to credit, you would be able to figure this out. This is as good as a simple fill in the blanks question to you all because you're at CA intermediate level. So this is again a very easy one. I think I wouldn't solve a question like this also in the class, considering the difficulty level. This is something that would waste the class time because we solve much better questions in the class. So as far as I see, question number 2 and 3, 40 marks though is a steel deal. Definitely not something that people would have found difficult. But if you would have started with question number 1 and then looked at some questions, not the kind of question that you practice, then your morale would have gone low. So that's the reason we always say in the first 15 minutes, don't stick to just reading one question, but glance through the entire paper so that you can pick which question to not write in the exam and then which question to start your paper with. So maybe even if you're writing the examination for the next 3 papers, so keep this in mind and then try to ensure that in that 15 minutes you don't just read the first question, but you read all the 6 questions to see which is that one question that you're skipping, and out of the remaining 5 questions, though question number 1 is compulsory, what is the order in which you are going to write your answers? Because all of us know it, the first answer in your answer paper has to be the best answer. So let us ensure that the first answer is the best answer by picking the best answer as the first answer. As simple as it. All of us know this, but how many of us end up doing it in the exam is what matters. And those who end up doing it in the exam are the people who end up clearing the exam. Question number 4, they've asked you to prepare, they've given balance sheet extra. Either they would ask you to prepare balance sheet or P. So they've given closing inventory, miscellaneous receipts, land revaluation is there, and depreciation is to be provided, provision has to be created. So this is a question on preparation of statement of profit or loss only. So this is a format based question and you would have to prepare profit and loss statement only. There is no requirement to prepare balance sheet. So same format, revenue from operation, other income, and then you write your what to say, consumption of raw material, purchase of stock in trade, changes in inventory, employee benefit cost, borrowing cost, depreciation, amortization, expense, other expense. Just write up the format, and then whatever item is there, end up writing the note number. Notes to accounts are very important. Marks will be given for notes to accounts also. I hope you would have done that. Dividend is one adjustment that you would have to do from the results, which would not come in our statement of profit or loss. So that's one tricky place that you need to keep in mind. And provision for tax, you will not provide it in other expenses, you will provide it after profit, remember that. And revaluation of land if you've done right, and after that, and depreciation, so is easy. That's it, nothing much, a very easy one. So though you are not preparing balance sheet, you might have to prepare one note for tangible assets because of revaluation that is there and depreciation that you would have to do for plant and machinery. I hope you've done that, and there is no big disclosure requirements also in the question. So cool, easy one. So 10th one, summarized balance sheet is given, opening and closing balances both way. Okay, what are they expecting you to do? They're expecting you to prepare cash flow statement from operating activities only. Oh, cool. So they're not asking you to do financing activities, investing activities and all. They're asking you to do only operating activities. There are a lot of approaches in which you can solve, but approach that I would recommend always students to follow is always identify the accounts with difference in opening and closing balance. Whenever there is difference in opening and closing balance, that means something's happening in that account. Also see and look for adjustments, and in the adjustments, if any asset or liabilities name is taken, again something's happening. So prepare ledger accounts for all of those items for which there is difference in opening and closing and for which there is adjustments. So once you do all of these ledgers, read the question, identify the transaction, put it into that ledger. Wherever you find any item of cash being affected or any item of profit and loss account being affected, so that would end up coming into our financial statements or our cash flow statement. If in case it has cash involved, check whether it is operating, investing or financing. In this case, pick only operating items and then write them, seeing whether it is inflow or outflow. However, what we're doing is indirect approach. So what you do is, if it is affecting our profit and loss account, remember that it would have come in profit and loss account, debit side or credit side. If it is an operating and cash item appearing in P&L, cool. If it is a non-operating item which has been debited to P&L, we add back to net profit. If it is a non-operating item which has been credited to P&L, then it would have been previously increased our profit. So we deduct it. So identify items affecting operating and then basically do it. So simple thing is draw ledgers, identify items where there is P&L account involved, check if it is operating and cash. If it is operating and cash, cool. If it is non-operating and or non-cash, then if it is debited to P&L, add back. If it is credited to P&L, deduct. And after doing this, you might have to still do changes in working capital. And in changes in working capital, you will not include provision for tax, and rest upon everything is simple. So you can do this. So you don't have to be worried whether your CFS tallied or not also here, because they have not asked you to prepare complete CFS. You're preparing only operating. You arrive at some number as cash flow from operating activity. You really don't know whether it is correct or not. So good. That's good. That's good. So this again, I don't find any peculiar adjustment as such. Cash flow statement, very much doable question. Interest is there. Long-term investments are sold, and debentures half-year interest, provision for tax, interim dividend, furniture. So all the adjustments are something that we've done in the class. There's nothing new or peculiar. So doable. Here comes a very interesting question. Question number 5A. Your favorite, profit pre and post incorporation. So again, plenty of items. You just have to segregate them. Remember, you don't have to start with opening stock and closing stock. You can either do sales minus cost of goods sold, arrive at gross profit, share it in sales ratio, and then start. Or you can segregate sales in sales ratio and cost of goods sold also in sales ratio, and then go ahead. Remember to prepare it in the vertical format. I hope you've done that. Sales ratio and time ratio, you would compute that also in the beginning. So items with adjustment, donation is one peculiar adjustment. We're told like only companies can make donation and political party contributions. Section 181, 182, remember. So we would take that as post, because one of our question in ICS Departmental has done that. However, talking about your company law, there is restriction for a newly incorporated company to make donations to donations and political contributions. So we're not touching so much of law here. So there are few easy ones like underwriting commission, which will be post, interest received on investments, which again has to be seen, and audit fees, nothing mentioned. Then we'd have to assume something and then do it. There is interest on loan. We need to see if there is any interest paid on purchase consideration. So they've given average based one. Again, just write that average amount and do our sales ratio computation based on writing each month's average, taking the pre period, taking the post period, and then reducing to find the ratio. So they're saying there was a loan of 15 lakh at an interest rate at 10%. The loan was repaid on 1st September. You see, when is the loan repaid? If the date of repayment is before date of incorporation, entire amount is free. If the date of repayment is after date of incorporation, don't do time ratio. From the beginning till the date of payment, whatever is there, for that period, you need to see how much is pre, how much is post, and then compute. Extra space is there. So extra space is taken after incorporation. So entire amount will be post if it is the for that extra space. For the balance, you'd have to segregate it based on time ratio. They're saying that the audit fees completely pertains to company, so it will be post. Bad debt recovered adjustment is there. If it is already deducted from bad debt, it should not have been. So you'll recompute your bad debts, and bad debts will be segregated in sales ratio, and bad debts recovered pertain to pre-incorporation period, that will go to pre, and salary to sales manager is period is given, so you compute it based on the actual basis, and donation is given to political party, so that will be post. So easy one, easy one. They've just given 3 sub questions, but it is the same thing that we do here. In case they'll give marks for time ratio, sales ratio also. They'll give you marks for that statement also, and they'll give you marks for that statement that you write as to how much is the amount to be treated to transfer to capital reserve or goodwill. I don't know if there is loss. So this 10 marks is also very easy as far as I see. There is no new adjustments or no tricky adjustment. Then we have question from insurance claim, loss of stock. There is no questions from loss of profit in this paper because they've already given question from loss of stock, unless there is another 10 marker one which I should see. So far there is purchasers pay commission. One of the questions we've done in the class has this. So again, that's it. Same. Occurred in the village. Most of the stock is destroyed. Salvage value is given, deducted from the stock as on date of fire to find the loss of stock. Later you will do cross multiplication to find the amount of claim, and damaged stock salvage value is given. Cost of stock salvage being 51 in addition. Some stock salvage in damaged condition and its value in that condition. Okay, 30,540. These goods have been salvaged and then the further consideration is received. So in one of the questions that we've done in the class also this thing is there. So you have to write that insurance company has to pay you again separately for this 30,540. I hope you write that statement. And because see, those salvaged goods have been sold, maybe it's assumed to be taken over by insurance company and only, and they would have to pay you for that value of the goods that's taken. So closing stock, this is of last year. So you would have to prepare last year's trading account to identify the GP percentage. It's appeared to no, they've given the last year's GP percentage to be 30%. So no problem, you don't have to prepare last year's trading. Straight away start with memorandum trading. GP percentage is 20%. Last year's closing stock of 183,500 is current year's opening stock. You will write purchase. On purchase, you will write commission in debit side in memorandum trading account. They have given sales. You write that GP percentage you put. That's it. You will identify the stock as on date of fire after you write GP. Stock as on date of fire. You deduct the 51,200 salvage. You will get loss of stock. There is policy to the extent of 3 lakh. Check if the policy is sufficient. Check if there is under insurance. If there is under insurance, you will apply average clause. If there is no under insurance, loss of stock itself is amount of claim. So not lengthy because you don't have to prepare previous year's trading account also. Simple 5 marker question. Then we have question number 5C. This is on accounting standard 11. No. Branch accounting. They have given trading. Oh, this is a cakewalk. They have given ratios also. Opening rate, closing rate, and then average rate. So identify which item ke liye what I would have to put. Historical cost rate for assets, and then for regular transaction revenue transactions here average rate, and for monetary items closing rate. Just multiply, find the trial balance in the home currency. So very simple one. Foreign branch computation, 5 marks, cakewalk. I don't know why people found the paper difficult. So far it looks very easy. When we sit after the exam analysis. In the exam, it's always what? 6A. Again, accounting standard based question. Number 1 is on disclosure requirements. So the first one they have same is disclose. They have not complied with AS2. Mere disclosure is not a remedy. You would have to comply with it. So that's the statement that you would write for first one. Second one is taken in the position of building, book value of the building, documentation. So it is based on substance over form. So the asset is purchased. Now asset is sold, consideration is received, just the legal documents are pending. So you should go by substance over form and accrual system and record it. They have forgotten to write it, they have written as advance, which is wrong. And D limited has prepared its accounts on cash basis. Accounting standard 1, fundamental accounting assumptions, it has to be on the basis of accrual system. They have recorded cash basis, they would have to disclose that fundamental accounting assumption of accrual is not followed. One liner disclosures, 1 mark is what you would get for it because 4 sub questions and each question is 4 marks. G limited disclose significant, they would have disclosed in director's report. They should disclose in notes to accounts. So that's it. First one is based on disclosure of accounting policies, a 5 marker one. And yeah, last question there are 5 sub questions. You need to answer only 4. You have option to skip one. I don't know which one have you skipped, or I don't know if you skipped the entire question. So the second one is based on hire purchase again. Hire purchase. They've asked you to compute cash price. Easy one. They have not asked you to do any accounting. They've asked you to only compute cash price for 5 marks. So hire purchase luckily has come for 15 marks this time. Guys, insurance claim only 5 marks. Financial statements 10 marks. P&L preparation only. Cash flow statement 10 marks. 10 marks from lot of chapters. Then you have debenture. Debenture. They've asked you to write journal entry and about investment, redemption of debentures, redeemable part, debentures redeemed at premium, and they maintained that asset, TRR investments. So they're asking you to do the accounting. So 5 marks ke liye, it is not very complicated. Only one set of debentures redeemed at premium. 5 marks. They've asked you accounting entries. And next one we have, this is from framework to financial statements, module 1. I remember someone asking question on this. So this is where you need to just maintain, no, whether the capital is same, how much is the drawings made, can the further drawings be made. You compute that number of units into purchase price, that will be your deduction from the capital. Number of units into selling price, that will be your selling price that you add to capital. Or basically purchase and sales difference you'll find as profit, add profit to capital and then deduct drawings, will arrive at closing capital. If closing capital should be same as opening capital, that is historical cost method. And what do you say, current purchasing price may you would have to maintain the same number of units at the end of the year. At the recent purchase price you would have to maintain so much. Do you have sufficient capital? If not, how much is the deficiency? You have to find that. And physical capital maintenance. So this is a very simple one, basic math, but this you will be able to do only if you've done this concept before. If you've skipped certain topics, then you might not be able to do this in the exam. This is one of the very easy topics to do. I think you can tell it's like mostly like CA foundation type level question, but you will be able to do this only and only if you've done this in class. Definitely would have been taught to you in class. It is just about have you done it the day before the exam. Little unpredictable also this kind of question, but it has come once if I'm not wrong. July 2021 if I'm not wrong, this question was there in the paper. After that, lot of students started doing this. Till then though people were not. This is my favorite storing question. Bonus issue, I'll tell you, this is the first question that I saw the moment I got the question paper in hand. So this was a 5 marker. This you would have been done it if you had attended the class for sure. After doing all the questions from the study material, we did one question where there were partly paid up shares to be converted to fully paid up, and there were fully paid up shares for whom the bonus issue was supposed to be made, but the ratio of bonus was not given in the question. We were supposed to figure out the ratio in which bonus issue has to be made based on the conversion of partly paid up shares to fully paid up by way of bonus. If you recall, it was the question of how to Julia. I had given that question to you as homework at the end, and a very similar question is there. You would not find a question like this in any of the RTPs, any of the MTPs, or the study material. I had made this question because in the old scheme, CA IPCC scheme, one of the RTPs had this question, and this was a kind of question that was there under PCC scheme. So if you would have done this, you would have loved the paper. Easy to do, easy to do. All you would have to do is see 6 rupees share has been converted to 10 rupees. So 4 rupees bonus for 6 rupees paid up. So that is 2:3 is the bonus ratio for fully paid up shares of 1,50,000. 1,50,000 divided by 3, 50,000 into 2, 1 lakh shares have to be given as bonus to fully paid up shareholders. And you have the reserves availability. There is some amount of reserve which has come because of absorption, that is amalgamation. Remember that such security premium which is received on amalgamation, which is arise because of amalgamation, has not been received in cash and it is not available for capitalization of reserves. However, our CRR and security premium is fully not available for conversion of partly paid up to fully paid up. For conversion of partly paid up to fully paid up, you will use CRR, general reserve and P&L account. And for issue of fully paid up shares as bonus, you will use capital redemption reserve, security premium, and then capital reserve, and then general reserve, and finally P&L. Order is important. However, you don't have to worry, they have not questioned you to prepare the financial statements, that is balance sheet after or notes to accounts. So that's it. And before I go any further ahead and end this video, let me just quickly see the answer to the polls that people have made. I had conducted this poll on Telegram. You can also join this Telegram group. You can just search for Accountsman, ACCOUNTSMAN, and you will find me on Telegram. And let me see, the first question that I'd asked is, how was today's accounts exam questions? Option E was expected, second option was unexpected, and third one can't say. I voted for can't say because I wanted to stay neutral. So 32% of the people have told that questions were expected, but majority, 40% students have told that paper is unexpected. So I would say question number 2, 3, 4, 5 was more of what is expected all by itself. But however, redemption of debentures in question number 6, financial statements framework question, bonus issue question, and question number 1 basically was not very much like you expected. So I would give it to you. About 40 marks of the paper was pretty much not usually like how you expect. It was little offbeat. Second question that I'd asked is, what did you feel about the length of the paper? Very lengthy, manageable, not lengthy. No, 80% of the students have told that the paper was very, very lengthy. They've told that it was very, very lengthy. Only 4% have told it's not lengthy, that includes me. And this is based on 118 votes that I've got. And 16% people have told manageable. What I would say is, see, this bonus issue question 5 marks ke liye it's little too much, and this profit pre and post incorporation was easy, not many adjustments. So I would say insurance claim, branch accounting, profit pre and post was very much manageable in time. Departmental accounting and incomplete records also. Investment accounting, this and hire purchase also. I think paper was manageable in time. Maybe short of practice, but however I'd give the benefit of doubt. Maybe it might be a very good possibility that it was lengthy. A lot of 10 markers. There was no 20 marker and no 15 marker. So I would give it to you. It might have been little more lengthy than usual. But not so lengthy that you can't even write for 80 marks. Guys. 85, 90 marks is easily manageable in time. And what part was tricky? 38% of them have told module 1 based questions, accounting standards and financial statements framework part was difficult. 4% people have told company accounts based questions were difficult, that is preparation of financial statements, bonus issue, right issue, profit pre and post incorporation and cash flow statement. 12% people have told special transaction, that is hire purchase, investment, insurance, claim, department and branch was difficult. 22% have told none of them are tricky, and 24% of them have told everything was tricky. And this is it for this discussion video. I hope your preparations for law paper is going great. Please don't sleep tonight. Do as much as law possible today only. And I know people who are writing exam in 2 days are also still watching this. So do well in the remaining papers. People who are writing in November, please wait. Right after this group 2 last paper is over, we'll be uploading a detailed solution video also, which you should watch. That's it, guys. Hope this video was useful to you people. Remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun, it's all good. The day you guys either stop learning something or stop having fun, trust me, you might start struggling because you might be in a battle. So, thumb rule to stay happy is pretty simple, it is to stay in the game. So, one last time on this day, I have just one simple question for all of you. Are we in the game? I hope the answer is yes, we are in the game. See you all in the next one. Till then, tata, bye bye, take care, guys. Get lost.